Realty Income Stock, ticker symbol O, the famous monthly dividend paying stock. And is this stock going to $50 soon? This stock is down 21% on the 1-year chart, underperforming the SP 500. And in 2 weeks, Realty Income is going to present their latest earnings. And people love Realty Income stock because of multiple reasons, one of the main things being the dividend. And I understand why, with dividend yield at 5.68%. And of course the monthly payouts. And if we look at the past 5 years, we see that Realty Income underperforms the SP 500 big time. And keep in mind, this is including dividends. So could this be the perfect time to buy Realty Income stock? Well, in this short and quick update video, I will give you my 3 price targets, so make sure to stay tuned and see how I build up to these price targets. And more importantly, which price target is the most justified in my opinion. I'm very excited to see what you guys think about this stock, so please let me know your thoughts in the comments. My name is Thomas and this is Thomas Invest. I'm an investor looking for great stocks at great prices. So what does Realty Income do? Realty Income focuses on acquiring freestanding single unit properties leased to industry leading operators under long-term net lease agreements. Realty Income is a 38 billion market cap company. PE ratio is not a fair metric to use with REITs, so I'll be using the price to FFO instead. Right now it is sitting at almost 12.9, indicating they might be undervalued. Later in this video I will show you my 3 price targets for Realty Income stock, so make sure to watch until the end, because price to FFO is only telling a small part of the full story here. And in the meantime, please let me know your thoughts on the current valuation on Realty Income. And I'm also interested to hear your thoughts in general on this company. Revenue is at 389 billion, and in this graph we see that revenue went up in the long run. It has to be said that for a REIT it is growing really steady and consistent. In the past couple of years revenue really skyrocketed, also due to some mergers and acquisitions. We see that margins are going down over a longer period of time, and this is of course something that worries me a lot, especially since 2020 the margins look not that great. EPS is showing similar trends as the margin and the revenue. For a REIT it looks pretty decent. Analysis expect that from here EPS gradually increases to $1.7 in 2027, and we see mid-single digit growth per year. For the revenue it is also looking very interesting, with an estimate of 6 billion in 2026, and growth numbers are fluctuating a lot, with 6 on the low side all the way up to 26% on the high side. Return on assets is sitting at 3.2%, which is a low number for a REIT. Return on equity is looking also a bit low, and the most important number, return on invested capital, is sitting at 1.9%, which is a low number even for a REIT. It is also lower than the 5-year average, so that's something that is also not looking good. Current ratio is at 1.55, which is a decent number for a REIT. Nothing special to mention here. Historically it looked pretty good to me. Right now Realty Income has 21 billion in debt, and I prefer companies that can pay down at least a big chunk of their total debt with the total cash. Realty Income has 367 million in total cash, so they can't pay down a big chunk of their total debt. And this is something that I don't like. To be honest, this could be a potential red flag to me. So it is very important that free cash flow is growing, since this is used to pay down debt of course, but also to buy back shares, pay dividends and all other things. And here we see that free cash flow is going up in the long run, which is a great thing. Shares outstanding are increasing, which is very common for a REIT, since they increase shares to raise capital. But when shares outstanding are decreasing, it increases your ownership in the company, increases the EPS, lowers the PE ratio and makes it easier to maintain and increase the dividends. And since we're talking about dividends anyways, dividend yield is sitting at 5.68%, which is a great number. And keep in mind that Realty Income pays a monthly dividend instead of a quarterly dividend. Annual payout is a little bit over $3 and payout ratio is around 74%, which is below the 75% average for REITs. The 5-year growth rate is at 3.6%, which is a decent number. On top of that, they increased the dividends for 26 years in a row, which is really nice. In here we see the dividends paid since 2012, and to me this looks really good. Realty Income really likes to increase the dividends at a low rate, but over a longer period of time this really adds up. In this graph we see the expected dividends in 2024 and 2025. Of course this is an estimation that can be highly impacted by results, but it gives you a rough indication. It's expected to grow at the historical rate from here. Overall these dividends look pretty good to me, but how about the historical returns? I decided to compare Realty Income Stock with the overall market, in this case the SP500. Next to that I added ADC and NNN. On the 5-year chart we see that Realty Income only returned minus 1.85%, and this is including dividends. The SP500 did return 96%, massively outperforming all stocks in this list. ADC had the highest return of these three REITs with 6%. On the 1-year chart it looks pretty interesting with the SP500 again beating all stocks in this list. The three REITs are all having a negative return, and again this is including dividends. On the 6-month chart it is again the SP500 that is having the highest return with 10% versus minus 9.8% for Realty Income. On the 1-month chart it is the SP500 with the highest return again. All the others are again seeing a negative return. So bottom line, the SP500 was by far the better investment in the past 5 years. But with the stock being hammered down a lot, it could be a great potential investment. So, is this the perfect time to buy Realty Income stock? Well, let's check the 3 price targets that I created using the Everything Money software, which is one of the best tools out there. I'm using a low, mid and high assumption to get the 3 price targets. But before we dive into the numbers, I just want to highlight that upcoming earnings could influence the numbers we put in, so keep that in mind. For the revenue growth I'm filling in 8, 10 and 12%, based on historical performance, their own outlook, but also because of the analysis. For the profit margin I'm filling in 21, 22 and 23%. And for the free cash flow margin I'm putting in 70, 72 and 74%. For the PE ratio I'm putting in 20 since it is a REIT. And for the price to free cash flow I'm putting in 12, 13 and 14. My desired annual return is 15% since I can get an easy 10% average annual return with owning an ETF. Usually I put in 12.5%, but I want to build in a higher margin of safety here. Right now Realty Income stock is around $53. I hit analyze and we see a few green numbers. And since this is a REIT I'm only focusing on the discounted cash flow value. We have a low price target of $50, we have a mid price target of $61 and we have a high price target of $75. And to me the mid to high price target is the most justified here, indicating that this stock is undervalued. And again, based on the current information we have, the earnings next 2 weeks could change this. And please let me know the price target that you think is the most justified in the comments down below. My final conclusion on Realty Income stock is that I really like the company. It is the biggest REIT in my portfolio and with reason. They are rock solid and most fundamentals look pretty good. From a dividend point of view I really get excited with a high yield, sustainable dividends and monthly payouts. From a value point of view things also look really good. And I can't wait to see the new earnings, and when the time is there I will do a new analysis on Realty Income. And remember to always do your own research and never fully trust on what I or other YouTubers say about a stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.